Welcome to the podcast. Today's headline: A credibility shock looms over the Federal. This story comes from a New York Times newsletter by Andrew Ross Sorkin, Bernhard Warner, Sarah Kessler, Michael J. DeLamerced, Nico Gallegly, Brian O'Keefe, Sri Mupadai, and Ian Mount. Andrew Sorkin opens by noting that bonds sold off sharply after the Federal Reserve's latest rate decision, signaling growing turmoil between the markets and the central bank. He writes that the real story is the insistence by Kevin Warsh, the Fed chairman, on letting markets run their course, a vision he telegraphed before getting the job. Warsh also said he wanted a quieter central bank, but for now there is plenty of short-term noise. The latest, the Fed left its benchmark lending rate unchanged on Wednesday in a dissent-filled vote. Markets are worried that the Fed may be falling behind in its efforts to tamp down inflation. A sell-off in long-dated bonds accelerated on Wednesday during Warsh's news conference and continued on Thursday. The 30-year U.S. Treasury bond yield rose to 5.23%, the highest since 2007. Traders set the odds of a September interest rate increase at 60%, and several Wall Street economists predict a series of hikes on the horizon. S&P 500 futures are rebounding on Thursday after a late afternoon swoon Wednesday. The market is sending a message about the Warsh Federal. The stock and bond moves on Wednesday, quote, were consistent with a central bank inflation credibility shock, unquote. That is from Aditya Bave, an economist at Bank of America, writing to investors last night. Bave added that Warsh evaded a lot of questions but made a few starkly dovish remarks. First, he opened the door for looking at other inflation indicators besides PCE. Second, he suggested there could be other tools besides hikes to fight inflation. Third, he implied that markets have done some of the Fed's tightening work for it. A reminder: PCE, or Personal Consumption Expenditures Price Index, has been the Fed's preferred inflation gauge, and it has been running hot for years. Warsh did sound hawkish at times, saying the Fed would not go soft on trying to bring inflation closer to the central bank's 2% target. The mixed messaging has left investors uneasy. Warsh has said he welcomes a good family fight among central bank policymakers. It looks like he's got one with investors now, too. Separately, the newsletter flags a report in the Financial Times that the hedge fund Situational Awareness, known for its big bets on artificial intelligence, is overextended in seeking new capital. That serves as a classic reminder that one fund's trouble can signal broader market stress. The newsletter is also tracking speculation that SpaceX wants to meaningfully break into the cellular market by acquiring more spectrum. Never count Elon Musk out, but with roughly 80% of Americans living in urban areas, that would require a significant ground-based infrastructure build-out. Remember, orbital satellites need line of sight to a device and a huge amount of capital. The bottom line: the bond market is flashing a warning sign about the Fed's credibility on inflation. With yields at multi-decade highs and traders pricing in more hikes, the Warsh Fed faces a critical test of its resolve and communication strategy. Thanks for listening. We'll be back with more updates soon.